There are a lot more different types of finance available. It's very easy. I mean, even early stage exploration projects are being offered royalty finance because there's so much royalty money trying to get into early stage opportunities. Streaming finance, different types of lending. Some is more palatable than others, convertible facilities, those sorts of things. So it's a very, very competitive world out there, and the issuance of new equity is just one of many options that's available to these guys.
Hello to viewers catching up on the video content for one-to-one mining investment EMEA online. I'm with John Meyer, partner and head of research at SP Angel, for a virtual fireside chat to dissect some of the interesting themes and opportunities in metals and mining at the moment. John, great to be with you virtually, of course. If we could just start with your view on how you see the health of the mining industry at the moment. We're in a better place than perhaps when we spoke about this sector last year.
Yeah, the industry is in great shape. Mining companies are pushing ahead with the projects that they've been developing quietly for many years. They have the finance to take those projects to the next level, and they are reinvigorated and pressing forwards at quite a rapid pace. So it's good to see this stuff developing. It's certainly good to see the money there for advancement. And it's good to see the value of the projects increasing and increasing quite fast, because there's a double whammy. It's not just the value of developing those projects, but it's also increased by the value of commodity prices going up. So there's an additional impact, whilst other certain input prices like oil still remain relatively low.
Yeah, it's a good period in that respect. Do you think the valuations are sort of fair for across the tiers? Do you think the junior mining companies are getting the love that they need in terms of going to investors and raising capital to continue the project?
No, there are still areas that are unloved. I mean, the sector, there's so many different aspects and facets to the mining sector, because it deals with not just the base metals, the precious metals, the PGMs, that's the platinum group metals, and the industrial minerals, things like vanadium, ilmenite, rare earths. So it's a lot of different areas for investors to understand. And of course, certain metals get the headline. So the first run we had was in gold. Gold stocks did very well. They took money that was available in the market, and then they added value to what they were doing. And then came the copper stocks. Now there aren't enough copper stocks, so those companies in the copper mining business again were beneficiaries of the cash available in the market, and their valuations are somewhat higher than they were. So their challenge now is to develop their underlying projects to justify the value that they now see in the marketplace.
Yeah, absolutely. And this is tied in obviously with the energy transition narrative, copper fundamental to electrification. But how profound is the energy transition for metals and mining? It's not a case that commodities have been rising and copper's necessarily going to fall dramatically. The demand story is very much there because of this energy transition and this push to get to greener economies. It's really driving the demand in the long term. Do you have a view or a take on that?
Well, it's one of the big themes that's driving metals prices at the moment is the development of new energy materials, new energy generation, wind farms, solar farms, and the battery packs that need to be built to support that wind and solar. Because if you get a big cloud that goes over a solar farm, it cuts off the power within milliseconds in some cases, and so the guys installing those systems into their grids have to be able to compensate very, very quickly. And this is one of the reasons why Elon Musk was able to sell so many Tesla batteries into those grid scale battery packs, because they needed to buy something, and they needed to buy something that could react within milliseconds in that sort of environment. So that's worked. The downside was not all those batteries were brilliantly well made, and they had quite a lot of fires in those utility scale batteries. The next generation, I think, of utility battery parks that are built are more likely to have more vanadium redox batteries in them because they're more robust. The only thing is what you have to have is a combination of lithium ion and vanadium. So what you get is a quick reaction from maybe a smaller lithium ion pack, and then a longer duration battery support for the grid from a vanadium redox battery.
Yeah, it's interesting how the chemistry determined by the end use is really coming into play within batteries. And do you have a view then, towards a certain battery chemistry mix? Obviously, vanadium redox you mentioned, but lithium-ion batteries are clearly here for this decade. So does that mean that you'd be bullish on the prospects for lithium and lithium juniors, for instance?
Well, the good news is there are lots of incremental improvements being made to batteries right now. You talk to companies like Talga Resources, they have their Tal node anode. That's good. You've got other companies working on ways of improving cathodes, and people are using graphene as well as better quality graphite, better spherical graphite, more consistent product mixes, and we can get all technical about this. But at the end of the day, what they're doing is they're producing better quality products for the battery manufacturers to put into place, and that will give better batteries that will be less prone to catching fire or less prone to just breaking down over time. In fact, Tesla batteries have been better than they were ever predicted to be. They've got better range, they last longer, the performance has been better. But one of the reasons for that is the battery packs are actually about twice as big as they should be in theory. But by having all that additional capacity, your average Tesla driver isn't stressing the battery as much as he might have done, and therefore the battery performance is very much better. Now, batteries of the future won't necessarily have to have all that redundant capacity. I think there'll still be a very similar chemistry mix. NCM, nickel, cobalt, manganese, and the heaviest material in there, I think, is the nickel, followed by the graphite. But there will be changes. But I think the great thing is the performance of the batteries is going to get better. We know that lots of manufacturers are looking at solid state lithium-ion batteries. Some of them are even looking at other chemistries. There's lithium sulfur, which we think is quite good. And there are a few others. But at the end of the day, I don't think you're going to get rid of lithium in a hurry, because lithium is inherently a very light metal. And at the end, and what you want is a car with a relatively light battery pack. And these battery packs are already very heavy. So you just don't want to be loading up your battery with something that may prove to be better, but actually weighs twice as much. That's not necessarily an enhancement from a consumer perspective.
Yeah, absolutely. It's interesting how nuanced it's all becoming in terms of the chemistry according to the end user or the battery cell manufacturer. Do you think then, if you incorporate things like, a sustainability of supply, where the resources come from, the quality, as you say, is really improving for some of the purities of the metals that need to go into these batteries? Do you think that we're going to get to a situation where there's a premium on certain products because they're sourced in a certain way and can be readily available quickly from a mining safe jurisdiction, for instance, versus something that's come from a more tricky jurisdiction with a bit more conflict behind it?
Well, it depends a bit on how deeply consumers dig into the ESG on these metals. Most mines run by Western mining companies, particularly listed mining companies, adhere to an awful lot of rules and regulations anyway. And okay, they can put a bit more effort in, spend a bit more money on ensuring that they have renewable energy generation. We all think that's a great idea. The best way to do is start off with solar panels for the canteen, and then expand that into wind and solar, or often hydro. And there's quite often hydropower opportunities around where these mines are, because they're in remote areas, but there's still water supplies and stuff like that. So there are ways of ensuring that these companies displace a certain amount of fossil fuel and then develop this to meet ESG requirements.
So with the investors that you speak with, John, are you getting more inquiries looking at a broader range of niche and transition metals? Investors really keen to get more insight on how they can get exposure to these metals within the green movement.
The big institutions are very keen to ensure that the companies they invest in are ESG compliant and CSR compliant. There's two reasons for that. Companies that adhere to these rules generally perform better, because if you're very conscious of local sensibilities, of environmental issues locally, then that discipline tends to feed through the company, and the company tends to do better. But also, if you take care of these issues early on, then you shouldn't get strikes, stoppages, blockades. You should have, your workforce should be in a better state of mind. Maintaining that morale is very important. It's not just about turning up and barking orders at people. It's about ensuring that everybody's on side. Also, that your corporate governance is appropriate. There's lots of rules and regulations around the makeup of boards, how those boards behave, those sorts of issues, which again are well proven to ensure that there's better quality corporate governance, and therefore a better run company at the end of the day. So although it might seem like a bit of a pain in the backside for some of these companies, the institutions can point at statistics that say, look, companies that are good at this also are better at better performers anyway within the stock market.
Yep, absolutely. Okay, so thinking about what this renewed demand will do for companies producing these transition metals, if you like, and thinking about we've got a sort of a big agenda from Biden to green the economy, improve the grid in the US. The EU is doing its part within trying to be a sort of thought leader or ramp up production of batteries domestically. And then, of course, China's continuing with their excellent growth story and investment into renewables as well. This is like a harmonized demand picture. What does that do to supply chains? We've seen some real strains on supply chains over the pandemic, and some real irregular occurrences that perhaps couldn't have been predicted. But it seems that supply chains around some of these niche metals and transition metals are going to come into some bottlenecks in the near term.
Yeah, I think there's going to be different types of supply chain issues. I mean, the one that we tend to all focus on is there simply going to be enough supply to meet demand, particularly with China, the US, and even Europe starting to grow again. So as the world opens up from various lockdowns in different forms, and governments try to stimulate new demand, then we are going to see a lot of demand, and that may well outstrip supply this year. The other side of it is that you've got logistical issues, and you've got probably those logistical issues creating some other disruption. So last year we had disruption caused by COVID, where maybe lorry drivers weren't turning up to work, maybe they couldn't get through to where they needed to be with their lorries. There were a lot of containers, as in shipping containers, stranded in the wrong parts of the world. And we still have that, but for different reasons. We've now got an awful lot of shipping containers either in the States which are empty, waiting to go back to China, or just so many on the sea trying to get into the States at the moment, that there's a bit of a shortage elsewhere in the world. So that's causing some disruption. We've got disruption that has been occurring in Latin America, particularly in Peru and in Chile, because of the COVID situation. And I think we're going to get more of that, but for slightly different reasons, because I think these mining companies are struggling to get some of the raw materials they need for the mining and the processing. So we know there are now problems with sourcing sulfuric acid, again in Chile, and I think also in China. And you can't create copper cathodes if you haven't got sulfuric acid. So one of the problems for that was there wasn't enough oil refining last year, and so a lot of the sulfur that is used in SXEW copper production comes from oil refineries. Well, they weren't producing so much oil, so they weren't producing so much sulfur either. So that is a supply chain issue that is directly impacting copper supply right now, and I think we're going to get more problems. So I wonder whether the supply of cyanide or coconut shells, for example, because coconuts are used for the activated carbon for the extraction of gold in certain plants, and I think we're going to see lots and lots of little issues like that having a bit of an impact here and there. It's not going to be anything. It's not going to kill off the mining companies, but it is going to reduce the output in certain places.
Yeah, it's interesting. There's a lot of challenges potentially on the horizon, and not just pandemic created, but as the world's industries change and adapt. It brings me to my sort of next point around, countries sort of stockpiling and taking more of an aggressive approach to get hold of raw material supply, either domestically or to hold on to it, or to encourage production here as well. We're seeing a little bit more of that.
Well, it's very simple. If a nation wants to develop, let's say, or redevelop its automotive industry in favor of electric vehicles, it needs to somehow guarantee the supply of rare earths, lithium, graphite, cobalt, because it's going to need to have captive battery manufacturing. Otherwise, you're losing a lot of your value chain. But worse than that, if your batteries are, if somebody else decides to buy batteries made in Japan that you thought you might get hold of, then you're going to be short. You can't build an industry on that sort of thing. So you need to have enough captive supply, and the only way you're going to get those battery manufacturers to locate in the UK is if they know that they can get hold of those materials locally. So I think governments are going to have to step in, otherwise the factories are going elsewhere.
Yeah, it's an interesting time in that respect. Of course, SP Angel did a successful IPO with Cornish Metals earlier this year, UK-based mining metals project, and that was a successful fundraising, bringing a tin resource potentially online for the UK. Can you tell us about the fundraising there?
Yeah, well, it was right time, right place in many respects. The share price hadn't done so well for a long time. The company had been keen to come to London for quite a while, but there wasn't sufficient investor interest for what they were trying to do. But of course, the fact is that the world needs more tin production. Tin is used for solder and certain aspects of, it's critical for connecting electronics together. And even though there was more thrifting in the world of connections, shall we say, there's less with the manufacturers that use less solder in their connections are not able to recycle it so much either. So there's an interesting issue there. So the tin price actually has risen a lot in recent months, and Cornish Metals were able to sort of capture that interest, shall we say. But also they had a new discovery down at United Downs. It was made for them very kindly by Cornish Lithium, who were actually drilling for geothermal and for lithium brines in Cornwall. And they just happened to hit rather a lot of copper and tin on the way down. In fact, there's twice as much copper in some of those drill holes as there is tin. So, this is absolutely what we need in the world, is more copper and more tin. So for me, I'm looking forward to the next set of drilling results to see what that brings through.
Yeah, it's a really interesting project as well. Do you think this kind of brownfield project, if proven successful, could open a wave of similar projects like it within the UK?
Well, United Downs is a very interesting situation because they're unlikely to go in through the old United Downs mine. And
Right.
this is an area, the new discovery is in an area between United Downs and the Wheel Maid mine. I'm afraid these names do come out of the era of Poldark. But there is an access decline from Wheel Maid that goes within, we reckon, within meters of where the discovery hole was. So it should be quite easy and quite low cost for the guys to reopen that decline, to get into the mining area and start mining relatively quickly. They already have a fully permitted site for processing facilities at the South Crofty mine, where I happened to work many years ago. And in fact, I think they'll end up with two mines almost for the cost of one, because whilst they're developing the Wheel Maid mine, they can start dewatering South Crofty and then build and then probably with the cash flow from Wheel Maid, use that for the redevelopment of South Crofty. So I think this is going to be very well timed, because the world's going to need a lot more tin, and nobody's discovered a lot more of this in recent years. I mean, the smelters are reliant on countries like Myanmar, which is in a state of chaos.
Yep.
Tin supply out of Indonesia, I think, is falling away because it's been very strong for many years, but they've had a lot of that now, and so the world is beginning to run a little bit short of some of these critical materials.
Yeah, it's very interesting. So keeping on the theme of sort of critical materials for the energy transition and such, I wanted to ask about PGMs, and then sort of throw that into the mix in terms of where automotive could be heading. We talk a lot about the battery metals, battery materials, but actually PGMs has a stronger case if you're thinking about the hydrogen fuel cell economy. And there's been a lot of, let's say, news flow around the hydrogen being the solution further down the line, perhaps into the 2030s at the moment. Do you have a view on the outlook for PGMs? Are you quite bullish on those? And what do you think about the hydrogen fuel cell technology taking off?
People are buying less diesel vehicles already, and we know they were discredited by Dieselgate. And of course, the particulates coming out of diesels are not fantastic for the health. But it's not the end of the combustion engine. It's just that if you live in a busy city, you're going to be persuaded to go electric. And there are lots of good reasons to go electric, because it's frankly it's much cheaper to run. So and the performance in many respects will be better as well, better and quieter and cheaper too. So it's not game over, but yes, there will be less platinum, palladium used in auto catalysts, but the cars that are running auto catalysts will need better catalysts to meet the new emissions regulations. Add to that the increase in emissions legislation for heavy trucks, that sort of thing. So it's not game over for PGMs at all, and in fact prices continue to rise. Because there are problems with mining those PGMs in South Africa. They've certainly got hit quite hard by COVID restrictions last year with the lockdown and that sort of thing. And there aren't that many places where you can economically mine PGMs. So it's very rare to make a discovery in this area, and it's even rarer to open a new mine. So very limited supply growth opportunities. And probably relatively, shall we say, relatively high PGM levels. Now, when I say that, I mean PGMs have effectively doubled over the last year to extraordinarily high levels. I'm not convinced that they'll necessarily keep up with these levels, but they're not showing any signs of weakness right now.
Yeah, and do you see M&A then on the horizon, or is it a case of, well, it depends on the commodity and the metal and the sector, but do you think there's been a loss of consciousness and self-preservation amongst the majors and the producers at board level based on bad M&A of the last cycle, and they're sort of waiting in the ranks to get it right? Or maybe it's something that the pandemic slowed down, with the lack of travel and being able to get to mine sites or something like that.
Well, weirdly enough, I think the fact that everybody's doing Zoom calls from home has actually speeded up the industry.
Yep.
A lot of people seem to be working much harder than they used to. So you don't get the chance of relaxing, in the pointy end of the aircraft anymore. Although I must admit, I spent a lot of time relaxing at the other end of the aircraft over the years. But I think we're seeing a lot of soft M&A, which is my term for joint venture type work.
Yeah.
Um, so unfortunately the majors can spend an awful lot of time looking at assets and then more than often walk away. But ultimately, I think there will be some competitive situations, particularly where projects have been brought forwards to the stage where they're oven ready, where they're ready for financing, where they're ready for construction, where they've been de-risked such that they've got a mining license and are absolutely ready to go, and they're talking to the bankers. And then maybe it's that perhaps somebody in a bank has a quiet word with somebody somewhere else, and who knows how it starts. But the major mining companies often seem to have their eye on these near development projects, and that's the point at which they pounce. So I mean it's hard work for those mining executives who think they're going to sell make a discovery, and they think they're about to sell the asset, and then they have to go through the grinding effort of having to do all the feasibility study work, get the mining license, go through all the environmental permits, and only at that point do the majors tend to jump in.
Yep. They're waiting for that de-risked position perfectly.
That's what they want, unless there is such a strong demand for buying things, so we say taking a risk and buying things early. But as we know, the majors are not keen on taking risk at the moment. That may change. They may start to get a bit more gutsy about it all. But I still think they do a lot by committee, and committees tend to want to have all the boxes ticked and all the risk reduced before they say yes.
And they're returning dividends to shareholders now, as we keep reading and seeing, and that's no bad thing, I guess, for shareholders that have been in mining for a while and are happy to have the cash coming back rather than having it spent at the moment.
Yes, and I guess some of that dividend flow trickles down into the junior market. There's certainly a lot more finance available for these companies, and there are a lot more different types of finance available. It's very easy. I mean, even early stage exploration projects are being offered royalty finance because there's so much royalty money trying to get into early stage opportunities. Streaming finance, different types of lending. Some is more palatable than others, convertible facilities, those sorts of things. So it's a very, very competitive world out there, and the issuance of new equity is just one of many options that's available to these guys.
There's been a lot of uptake for SPACs as well, which is a sort of new form of financing, I guess. Do you think that's something that's here to stay as a model, or do you think this is very much a special situation, kind of financing for companies that want to quickly take a position up on a stock exchange, and actually it could be risky for some investors in the long run?
Well, there's nothing really new about a SPAC. A SPAC is a shell company. Okay, it has its terminology. But it's there ready and waiting to go, and that works very well in the mining industry for getting an asset into the market before it's been, shall we say, normally de-risked. But we like the idea of having these companies ready and waiting. Stock exchanges ruled against them some years ago and made them harder to put together. They've become fashionable again, really because of the success of technology SPACs in the USA. But more of these are, I think, coming to market over here now. The problem with shell companies, as we normally see them, is that although management teams often say they're very keen to do deals, it seems to take them an awful long time before they settle on anything. And I wouldn't say that process has been satisfactory in recent years. So SPACs look like a better way to go for the market for now.
Yep, it's interesting. Okay, excellent. Well, John, thank you very much for taking time to give us a rundown of where things are at. It's been great getting those insights on the miners, the markets, and some of the financing options that are out there. So thanks for talking with us.
Thank you, Adam.